Jay Powell denied his first opportunity to lower rates, and the market went up. Confusion reigns on the weekend update. Okay, let's talk the market. Here's what you need to know. First up, let's take a look at the market the same way we've always been looking at it. Red line here is the S&P 500. Purple line is the 200-day moving average. And as you can see, we continue to forge new territory higher in the sky, all-time highs on the S&P 500. Trend looks extremely strong here, and it's kind of amazing. The Fed came out and we were sort of anticipating, at least at the start of the year, we were anticipating that the March meeting would bring a rate cut. We did not get that, and yet the market still rallied anyway. And this is one of those things I think it's so important. If you'll remember, when we didn't get the second half of February slowdown, one of the things that I said was we need to sort of adjust the way we're thinking about the market and say, it's not that we missed the slowdown and therefore it's going to come sometime in the future. Instead, the way that you interpreted that data is we missed the slowdown, and that means that this market trend is very strong. It's stronger than the seasonal, sort of weakness would have you believe. We've clearly seen that. The market continues to strike towards the sky. So that looks good. One of the things that I think was interesting, though, the Fed didn't cut, but the market rallied anyway. Why is that? And so what I've got here, this is the Federal Reserve press release. And one of the things that I think is so interesting is the Fed is starting to pay probably more than lip service to the economic weakness that's happening. And that's good. That's what's going to give us, the soft landing scenario if we get it. But this is the press release. So they released two things at this meeting. They released their famous or infamous dot plot, which we're going to look at later. But they also give you a press release. They give you a little bit of a narrative as to what they think is going on in the economy. And they added a line. The economic outlook is uncertain, and the committee remains highly attentive to inflation risks. Now, remember, this is for public consumption, so they know that people are going to be parsing this release for all sorts of words, trigger words. But adding in the economic outlook is uncertain. This isn't the first time that we've heard Jay Powell say this, that, they're clearly perceiving a slowdown in the economy. And we know the economy is slowing down, right? It's real. It's palpable. You can feel it. I talked to numerous clients who say, hey, things are pretty slow right now. And holiday season wasn't that great either. And it's not just client anecdotes. We're hearing this morning from Nike and Lululemon, and both of them are saying, hey, this year's going to be tough, right? Demand is getting impacted. So the Fed is very clearly seeing these risks. That's a good thing. That's what's going to prevent a harder landing, if they're able to get the interest rates to an accommodative sort of position ahead of time. But here's what really stole the show. Now, I don't care about this longer run dot that you can't see that's behind my head. I mainly care about 2024. And so this is the infamous dot plot. And what I'm showing you here, these are the December dots, and here are the March dots. And it looks like a whole bunch of gobbledygook on the chart here, but let me walk you through it. So each one of these dots is a Federal Reserve member basically saying, hey, here's where I think interest rates are going to be as of the end of that year. So this is 2024, 2025, 2026, and then longer run. And so at the end of December, if you ask the Federal Reserve governors where they thought interest rates would be, there were maybe, 1, 2, 3, 4, 5. So there were maybe 6 governors who said, oh yeah, 3 cuts, maybe we'll be there. There were a couple at 2 cuts, and there were some at 4 cuts, maybe 4. So this was a pretty wide dispersion, and they were casting sort of a wide net in December. However, as we get here to March, you can see that things have tightened up tremendously. So basically we have, I think it's 9 governors now, basically saying, hey, we're going to have 3 cuts this year. The 4-cut camp is pretty much only one person. And then there's a little bit of an upside surprise here. Holding rates steady or only delivering 1 cut has picked up a couple members. But what this tells us is, in terms of forecasting, we can have a higher degree of confidence that we're probably going to get 3 cuts this year. And Jay Powell said as much in the presser. He basically said at the press conference after releasing this, he basically said, even if employment, the labor market is still pretty strong, we're still going to deliver some cuts this year. And so that was the message that the market liked. The market liked hearing this message that, okay, the Fed sees the issues, they stand ready to cut. So even if we didn't get one at this meeting, We're pretty confident we're going to get some more at the later meetings this year. And with that, the market was off to the races. So there you go. More new all-time highs, more good news. That's all I got for you. I'll see you in a week.